All right, our next speaker is going to talk on the international tax arena. You know, with all the internet and the access to you know, doing business in other countries now, it's really probably one of the most exploding areas. I think Sean's going to touch on that a little bit. I know we have clients that are now in foreign countries, and you know, there's a lot of new things going on out there, and hopefully Sean's going to be able to shed some light on that for us.
All of it.
So all of it.
25
and answer all
minutes.
our questions. So welcome. Come on up, Sean.
Yeah, thanks.
All right. Hi, everyone. First, a little bit about me. I work for Jump Scalaro & Company, which is, some of you who are here a lot may recognize my father, Joe, who's been pretty active with the State Society. And as soon as I moved to New Jersey, he brought me to the first meeting he could and wrote me into this along with Jim. And it's been good. And I thank you, Jim, for asking me to do this. It's definitely good. All right. So I'm sure if many of you are working at smaller size, medium sized firms, your story's a lot like mine. I've been working in tax departments for 7 years. I've been working on and off with my dad for 15 years. You know, I'm a CPA in PA, CPA in New Jersey. But, you know, 5 years ago when I moved back from LA to his firm, all of a sudden we kind of got a, you know, he had done some international tax work, some compliance work, you know, a little bit here and there, but you know, a big client came upon us, and we said, hey, you know, let's do it, let's take it on. And just from that one larger client 5 years ago to now, I feel like I spend pretty much 60 to 80% of my time working on one client or another that has some kind of foreign compliance that I've got to deal with. And I'm sure everybody's a little bit like that at this point. So that's kind of my background. I'm not going to tell you that whatever question you ask me, I'm going to know the answer to, because I'm sure a lot of you are coming to that same conclusion. There's just so much out there and so much changing all the time that I think one of the good parts about this will be to try and build a community where, hey, people in smaller firms, medium-sized firms, if they've got a question, if they want to know how some other people in the industry are handling it, you know, maybe find me, ask me. Maybe if it's something I've dealt with, I can let you know what we're doing at our firm. Reach out to some people that hopefully the network we can build with the subcommittee here and reach out to them and see how they're dealing with it. So that's something that I'm hoping to accomplish here. All right, I went into this a little bit, but you know, international taxes according to ADP, second only behind state and local taxes as a area of growth among the top 100 accounting firms. So it's definitely happening. And global problems, and they're there for all businesses at this point. You know, one of the most common questions I get is from businesses of all sizes. Hey, I made a payment to a foreign vendor who isn't in the U.S. What do I have to do? Do they get a 1099? How do I handle that? And it happens all the time now. And so you've got to know at least, hey, what regs do I have to look into? You know, do they get the W-9? Do they get a W-8? You know, what is it? And I'm sure you've all looked up that question, and that only kind of scratches the surface as to what we have to deal with. And what resources are available. Like I said, it's hard. I mean, I'm sure we've all had to look at the regs and figure it out for ourselves, but sometimes you come to a point, well, that doesn't really help me. You know, that reg's reserved. You know, it's not the kind of thing where you can just Google the question, which I'm sure, you know, a lot of us don't do. But it's not the sort of thing where you're going to come with a good answer if you do that. So it'll be good to kind of build this and have a resource for everybody to go to if we can. You know what, let me put this on a slideshow. That'll make a lot more sense. All right, so I've given a couple seminars on foreign reporting. What I found is there's an opposite relationship to how many form numbers I name and how little people take away, or how much people take away. The more I try and squeeze into it, the less people kind of understand by the end of it, because there is so much. So the one thing I'm going to focus on today in FBARs and the TDF 90-22.1 and some of the recent changes with that. So just go over a little bit of background on that. It's, like I said, Form TDF 90-22.1. It's commonly referred to as the FBAR, Foreign Bank Account Reporting Form. It's used to report the maximum balance of a non-U.S. financial account. Basically, the rule of thumb I say is if it's got a number, you probably want to put it on this form. If it's something else, chances are it probably doesn't, like people say foreign currency. Well, if it's in an account, yes. If you're just holding 10 euro, then no, it doesn't need to go on this form. So that's kind of the rule of thumb I like to use. And it's due June 30th of the following tax year. No extensions, which I'm sure it's a blessing and a curse. But also something to keep in mind is this is not an IRS form. It's a Treasury Department form, which is what the TD stands for. So this has nothing to do with any kind of tax elections you've made. Specifically, tax year end. You're not going to file it 6 months after the tax year end if it's a fiscal year end. Also an LLC. It's a disregarded entity for federal tax purposes, but that's not the case here. It still needs to file its own FBAR form. So just something to keep in mind. All right, now a little bit about the history. It was introduced back in 1970, and my father swears he never filed one up until 2000 or whenever it was, but it has been around for a while. The big change was that stiffer penalties were added in the 2000s, so everybody kind of perked up and got on board with this. And those penalties are for non-willful filing. You're going to see a maximum of $10,000 penalty. And there is a reasonable cause exception to this, and I know we've had some people where they may be foreign nationals who pass the physical presence test, don't realize that they need to return until June, July, August when this is passed. And anything we've gotten to file before the October 15th extended deadline, even though they didn't have an extension, I haven't received any kind of notice or follow-up on that. And generally those aren't the type of people they're looking for, but one thing to keep in mind, that reasonable cause exception, it is out there for you. A willful non-filing, this is for your UBS guys, your people parking money overseas and everything. That's the greater of 100,000 or 50% of the maximum value of the account, and that's per violation. So, you got 10 accounts, that's 50% of every account per violation. So that means if they haven't done it for 10 years, you're talking 500% of the maximum account value. So it adds up pretty quickly, and it can become pretty serious. So who must file? Any U.S. person with an interest in or signatory authority over a foreign financial account greater than $10,000 in aggregate. So that means you got 2 accounts with $5,000 US maximum balance. You have a $10,000 aggregate balance in those accounts. Your client now has to file. And what is a U.S. person? Something to always keep in mind. Generally, when you're talking about these foreign reporting forms, a U.S. person is not a person the way we think about it. It's a U.S. citizen, a U.S. resident, and the rules for that, like I said, the physical presence and the green card test, which is 7701. And then a U.S. corporation, partnership, LLC, estate, or trust, they're also going to be a U.S. person, as well as a 50% owner of any of these items. 50% or greater owner, excuse me. You're basically going to be considered the owner of those because you have the right to do whatever you want with that money, basically. So those people are going to be required to file, as well as somebody, a corporate officer who has signatory over one of these foreign accounts is also going to have to file. And this is kind of a quick overview of what's going on in this form. Like I said, a foreign financial account, a bank account, securities account, custodial account, yes. Signatory accounts, yes. A foreign pension or deferred comp plan, no. It's one of the big differences between, which I'm not getting into today, the FATCA form, the 8938. Those you are going to have to try and find a value for and put on that form. And then, an interest in foreign partnerships, corporations, estates, and trusts. Again, no here, but it would be yes on that 8938 form. Foreign real estate, no. Jewelry, art, things like that. Tangible property, no, that's not going on here. Foreign currency in a U.S. bank, like I said, no. U.S. currency in a foreign financial institution, yes, and this can get kind of hairy. I know there were issues with some of our clients who do business in multiple countries and have a global account where, okay, they're getting the balance listed in U.S. dollars, they're getting it in pounds because they operate in both of those markets. And so, okay, where is this account really based out of? And you have to get the bank to hunt that down for you, even though they put on the address, oh, well, Citigroup, New York. It's still a question that you may want to follow up on if it comes up. And then, so the big change now, and why I'm going through all this, is now these forms need to be e-filed, and this is mandatory starting with July 1st of this year. I said June 30th of 2013, but July 1st of 2013, they are mandatory e-file. And this is all done through a new, FinCEN website that you're going to have to sign up for as a tax preparer and be able to file on behalf of some of your clients. Still, I'll get into that in a little bit. But it's not a huge penalty, but there's a $500 penalty for anybody who filed after this date. I do have a couple of my best clients who emailed me on July 20th. Hey, you know what? I didn't send that form by June 30th. I sent it in yesterday. I hope that's okay. I said, well, probably not, but we'll see what we can do, and we'll see if we hear anything back from them. As of yet, I haven't heard anything from those clients, or they haven't received any notices. But if they do, I'll certainly let you know. It's not currently supported by any of your tax software. The only place we can do it right now. They do allow for batch filing, but all that gets done through the FinCEN website, as well as the online logins and everything like that. And there's going to be two types of filers, either individual. We have some clients who just want to handle this themselves. This has nothing to do with their tax return. That's fine. They do handle it themselves. They can set up their own account, handle it, and deal with it themselves. Or institutional, and with supervisory users. And this is going to be for maybe if you have a client that has all subsidiaries that they want to deal with, or an accounting firm who's going to want to have not only multiple clients they're going to file for, but also multiple users under the institutional account. So that's kind of what you're looking at. Yes?
Are you saying that the returns that were due this year were as of June 30th?
No, that was a mistake on my part. I meant it was mandatory effective July 1st, 2013. So even if you were filing an old return, they don't want it on the paper form. So if you want to file one for 2005, you still now need to e-file that FBAR return.
But it's not the returns that were due for the...
Yes, the returns that were due then. I meant effective going forward from June 30th, 2013 forward. Yeah, so I apologize for the typo there. Yes?
Is there going to be any provisions that we're going to be able to report tax law?
As far as I haven't heard anything. I know that's been one of the criticisms at this point of this whole system, but as of yet, the IRS, they've made one provision to allow us, and I'll get into that in a bit, which is now they've given us a form to have the client sign saying that we can file on their behalf through the website. But as of yet, there's really no indication as to whether or not we'll be able to use any kind of software to do this. But I'm assuming the software companies want to get on board with that. So I would say it's going to get fixed at some point, and we are going to be able to do that. But when that happens, I'm not sure. Like I said, this kind of goes over all the information with the individual user. You just got to give them some basic information: name, address, telephone number, social security number, or the EIN if it's a business. And then they're going to send you an email that says, here's your user ID, come figure out your password and get set up on the site. And then all the signatures are going to be done through an electronic PIN that you set up with the site. So that's kind of how everything's going to be administered at this point. And also, I mentioned on the there's no other programs you're going to have to download. Basically, it's just going to be done through Adobe Reader, from what they say, and that's going to be it. So it shouldn't be anything that one of your systems can't handle. So, like I said, they can be filed by the institutions, CPAs, enrolled agents, and attorneys still. So you should be fine there. And the process for setting up the institutional account is pretty much the same thing. Only thing is you're going to have to set up somebody at your firm to be the supervisor of the account, who's going to handle all the account management type things, and all the kind of correspondence between FinCEN, if there is any, is going to go through that person. So, right, and on July 29th, they did announce that they were going to allow this third-party authorization form, which is the 114A. It's a one-page form. It's very short. Basically says, what's your name? What is the CPA or attorney going to be able to file for you? What years of this form? And then they sign and you sign. It's really more equivalent to an 8879. Only they're going to kind of fill in all that information and then provide you with the years that you're going to file on their behalf. So something that everybody should be used to. Your clients should be used to signing that. It shouldn't look like anything foreign to them. And really, I think it's going to make things easier because now you're going to be able to be in a little bit more control over when these forms do get filed. You're not going to be under the old deadlines of actually having it physically delivered to Detroit by June 30th, which was kind of the old way of doing things. So I think it will be good. And they have talked about some other proposed updates, like a space on the form itself for a reasonable cause for people filing late, and the third-party information for anybody who's, any preparers, basically. It's not there yet, but they are talking about getting it on the form. So. And just a reminder of how, I'm sorry, is there something back there? Or, no, sorry. Just a reminder how it used to be. Paper forms had to be received by June 30th, and because this wasn't an IRS form, it was never extended for any weekends. It was never extended for any holidays, not that there are any then. But for instance, this year, June 30th was a Sunday, so if you wanted it in Detroit, you had to get it there by June 28th, really. And there was a specific overnight mailing address. There was a lot of, it wasn't really a normal filing, and there were a lot of places to get tripped up. So I think this is, like I said, going to make things a little bit easier on our end, and knowing when something gets filed, even though it's new and we can't do it through the tax software, it's got to be done through FinCEN. But I do think in the long run it is going to make things a little bit easier for us. And like I said, you won't need to rely on that client to actually do what he's told and sign the form and put it in a FedEx envelope and get it where it needs to go. Because I know we didn't like necessarily getting power of attorney and signing anything on a client's behalf. So that was kind of what we were stuck with, relying on them to get it out. Good thing, very timely. This week on Thursday, the FinCEN webinar, and I got the website right in here, so if you can pull this down from the website, from the everything, basically it says it's intended specifically for software developers and third-party service providers such as attorneys and CPAs, as to, I guess, a little bit of the process of how this is going to go, and what you're going to have in store for you. I know we were planning on watching this and getting our firm set up basically within the next month. We haven't had to file anybody past the deadline, but a little teaser for next meeting, I guess, is I can let you know how that goes and give you a little bit more idea of how the back end of it works and when you get in there, because at the moment, I don't know, has anybody set up their account yet, have a little bit more information about it? Right, it's pretty new, so once we're in there and we know, a little bit of how the back end works, I can kind of bring that to the table and let everybody know exactly what they can expect. What's that? October 22nd, right, so. Barry.
I had a question.
Sure.
What do you have in your organizer? Do you have any area which specifies to ask the client? Because I think a lot of people might miss the boat there.
Yeah, absolutely. In our organizer, and we've had this for probably 4 or 5 years, there is a question, a check-the-box question, 2 of them actually, do you have any foreign bank accounts, basically, any money in foreign financial institutions? And then the more complicated one, do you have any distributions from any foreign trusts? Do you have any ownership of foreign trusts or any other foreign investments or anything like that? And even the lovely clients who send back the unfilled out organizer. It's like, oh, you sent me this, by the way, when you go to the meeting. That's always good. But even them, if we're meeting with them, we make sure we leave with at least that box checked, at least those 2 boxes checked, just for our liability.
You must ask the question.
Right.
Every claim.
Right.
You must ask.
That is correct. That is correct. That is something the NJCPA needs us to do in order to protect ourselves and make sure the client's protected and they know. Because they don't want anybody to use the old, oh, well, I didn't know I had this requirement line. They're kind of sick of that, I guess. Yes?
We had a question. First of all, October 14th, you come in, I do the tax return, and check the box. In June 30th. Second thing I've always worried about, is this practicing law or is it a crime? And we're all malpractice insurance coverage. What we've been concerned about those 2 issues.
Malpractice insurance, luckily we haven't had to go back and forth on any malpractice issues with this particular form. I know it's probably a little bit more cut and dry with all the other reporting forms because they get attached to the tax return. So as far as the TDF is concerned, because that's not an IRS form, I guess it does leave you up to that interpretation. I'm not sure. And as for the client, like I said, what I've advocated is if you can get the form in by the extended deadline and you have a legitimate, reasonable cause.
The client's lazy.
Well, no, the client's if the client's lazy and they click that box, you probably have to scratch a little deeper and figure out, okay, why do you have foreign financial accounts? Is this something you need to see an attorney about? How long have they had these foreign financial accounts? You know, because then you're into Covell issues and do you want to know enough? You know, do you want to know any more about this? Certainly something where if somebody is that type of person where they want to sneak that in on you, oh yeah, I have them, but don't worry about it. That's probably not something you want to do. But if there is good, reasonable cause, and they do check the box and they come to you after that June 30th deadline, at this point we have sent those in. Now, my argument's always been, well, these paper forms sit in a warehouse in Detroit and probably don't go anywhere again. But now that they're electronic, I don't know that that's even going to be the greatest advice anymore, because this is all going to get put into everybody's database, and those form letters might come out with the, well, here's your $10,000 penalty, we didn't like your reasonable cause. You know, so things are changing, and I don't know that necessarily will work the same way anymore. But,
I have a question. I probably didn't hear it. I'm sorry.
No, it's okay.
What was the for FR? What was the minimum amount they have to have?
You mean
10,000?
to be required to file? Yeah, 10,000 U.S. in aggregate maximum balance.
Yeah, but
So.
that's a tricky situation, because if you
No,
have
isn't
one
it
account
any
for
time during the
6,000,
year?
you close that
One day.
account.
Yep,
you roll it over to
Yep,
another
absolutely.
account.
If you roll it over, now we have dealt with the
That's the
IRS.
highest amount in any account cumulative.
Exactly. We have dealt with the IRS on some offshore voluntary disclosure issues where if you can prove to them that it's the same money, they're not going to penalize you twice for that money, as long as you can show the transfers in and out. But you're absolutely right. Even if it's you close one account, you open another account, and it's the same money, that's then going to give you the filing threshold of the 10,000, and it's any day converted at the 12/31 balance, right? So that's what you're dealing with.
There's also another tricky area on that part, because you mentioned real estate doesn't count.
Mhm.
Real estate can't count, because in a lot of countries, you cannot own real estate as an individual, as a non-national.
Right.
And therefore, the bank holds it for you in trust, and once it's in trust, it's now...
Absolutely, and another tricky area which your clients don't necessarily probably want to hear about is I've heard the conversation, or I've heard the accountants when I speak about this, or somebody say, well, they've got family over there, and all the accounts are set up in the brother's name, so don't worry about it. Well, you know what the laws say and what the instructions say, what the rules say are, hey, if an agent of yours has control over that account, that is considered you having control over that account. So absolutely, I mean, if somebody says, yes, but you have to scratch the surface and really get to the bottom of what's going on, because, you know, you want to cover yourself and protect yourself as far as the liability, because I know if they get this $10,000 penalty and it's something they're not aware of, the first call is going to be made to you and asking why I have this $10,000 penalty. So, Barry.
Foreign conversion of foreign dollars to U.S.
Right.
You want to just explain that thing?
Oh yeah. So I probably went over that quickly, but so what you're supposed to do with the conversion of the foreign amounts is you take the highest maximum balance, no matter what that day is. Say it's July 1st, you may have 10,000 pounds, and maybe the conversion rate on that date was 1.6 for the gross for the GDP. But at the end of the year-end rate, 12/31, which, by the way, when you get into rates too, just a quick aside, the IRS says you can use whatever rate you want, but they also publish rates. So our rule is, well, we're going to use the published rates unless the client has a rate that they use for business purposes that they use on a day-to-day basis. We're going to use those IRS Treasury Department published rates. And those are online for the end of every quarter, as well as the yearly average they post. So if you have any of those issues, head to irs.gov and you'll be able to find them. But when you have that maximum balance, no matter what date it is, and no matter what the the exchange rate on that date was you used the December 31st. And it does sound like a lot of you have had this experience before and are pretty familiar with this form, which is good, but it's definitely something now where you have to be on top of it. So, Jim, do I still have time, or is it?
Yeah, you got 2 minutes.
All right. And like I said, there's this FinCEN webinar that's going to shed a little bit more light on the Efile situation. So if you have time on Thursday, probably a good idea. I don't think there's any kind of registration fee, or at least we went through the process and didn't see it. So so there you go. All right. For more info, this is one of the, the IRS, as Howard knows, there's plenty of reasons to complain about the IRS, but I find that the FAQs and all the information for FBARs and these filing requirements will answer almost every single question you have about this, and in detail with examples, penalty calculations, all of that. So if you do have a client that has these sorts of issues and wants to, have phone conversations, have some idea of what they're dealing with, just send before you find anything out, send them here, or help them along to here, and that should answer most of their questions as far as what they're in for, as well as some of the offshore voluntary disclosure programs that are still in existence and at this point are pretty much going to run continuously, because it's a new piggy bank for the IRS to just start collecting money to get these non-compliant taxpayers in. So at this point it is there. The penalties are still pretty steep, but much better than 50% of the account every single year. So something to look into if you do have the client who comes to you and you do scratch the surface and find there's more than you want to deal with. So. Now I was going to go into something quick. Oh, go ahead. I'm sorry.
Can I ask one question?
Sure.
If you find out a client has an FR filing requirement after the due date, are there late filing penalties? I only know of the willful and non-willful.
Well, they are technically late and non-filing penalties, both of them. So that's why it's a tricky situation. And like I said, previously I had sort of said, well, if we can get it in by that October 15th deadline, and there's reasonable cause, and a lot of the times our situation was a non-U.S. citizen who was maybe meeting the physical presence test for the first year, was somewhere in Europe where everything is just done for them. Okay, then maybe I could say, I think that's reasonable cause to file this and we can get out of the penalty. But now with the changes, we're going to be e-filing it. I don't necessarily know what the IRS's sort of kind of protocol is for responding to even a late filed FBAR.
So you just file it, and then would you attach anything with it? Because you really
Well, I mean, personally, I think that they might want to talk to a lawyer who can help them out. I mean, it all depends facts and circumstances. I do think that the reasonable cause exception is there, and there is a difference between willful and non-willful, even though the IRS refuses to define either of those things.
Right.
I do think there's a difference, and that if you're uncomfortable making that judgment, it's probably the time to talk to a lawyer and have them talk to a lawyer about it, both to cover you and to cover the client.
But Sean, if it's multiple years, you clearly want to consider the offshore voluntary disclosure. If it's more than just the current year.
Yeah, I would agree, because and just to go, probably not even worry about this, but just to go into the offshore voluntary disclosure program a little, that's going to cut your penalty. If you have a client that has had these FBAR filing requirements for 5 years maybe, and hasn't filed, that's going to cut the penalty down from a maximum of 50% of the value every single year, which is 250% of the value if it's one number, that balance, down to, I believe it's 27.5% of the maximum at this point. So of the highest single day, basically, balance in your account. So the most money you had at one time, or this client had at one time, offshore, you're going to take that number times by 27.5, and that's going to be it. The bad part about that is not only will that include the bank accounts through the offshore voluntary disclosure program, but it's going to include all the foreign financial assets now. So that 8938 form, which I didn't talk about, but you're probably a little bit familiar with because it was new last year, it's going to cover basically everything on that. which is a little bit more expansive. It's going to go into all your foreign financial assets that produced income that you were hiding. Because, again, I think there's a difference. The offshore voluntary disclosure programs are only for non-compliant taxpayers as well. So if somebody has money that for whatever reason, maybe it was a checking account in another country that had no income, or that was a checking account where they were compliant, and if there was interest on that account, it was on the tax return, but they just didn't know they had to file the FBAR, or they didn't file the FBAR. It's two separate things. And generally, what the FAQ says is that the offshore voluntary disclosure program isn't for somebody who is tax compliant. You know, and generally that's going to get you a reasonable cause exception if you've paid all the tax on everything in the past anyway, but it's just the reporting that you haven't done. You should be safe generally. I think it is a good rule as well. But just something to keep in mind. And like I said, if you do get into these conversations with your clients, probably the next step is deciding when and if a tax attorney or a legal representative is necessary, and when you want to cut your client off and feel like you know too much, because what you talk about with your client isn't going to be covered under any kind of attorney-client privilege. That can only be done if you are hired by their attorney and everything is covered under a Covell agreement where your work product is really a subcontracted work product of the attorney. So again, another thing to think about and to worry about. So, any other questions about this? And I know I didn't get into the 8938, the FATCA form, but any questions about that or anything else? No, I'm going to skip this last part. Seems like we but yeah, so again, if you have any questions, you can probably find my email someplace, so you can feel free. Yeah, Jim.
I did have one question. I mean, I know this is talk about, you know, the TD90s and
Yeah.
filing requirements, but we get a lot of questions on businesses now that want to go into foreign countries.
Mhm.
I want to go into Hungary, I want to go to Finland, I want to set up an LLC. How do I do it?
Mhm.
What type of entity should I be?
Mhm.
What do I do back in the United States? How do I
Right.
report that? Just real quick, Sean, what do you do? Recommendation? If I have a sub-S here in the United States that want to go into Hungary, do we set up an LLC there and do we disregard the entity election?
I mean, it probably depends a lot on the type of business, what type of intercompany transactions you're going to have, cross-border transactions that you're going to have if there's going to be significant, what type of tax rates they have in the foreign country and everything like that, whether you're going to just want the credits to flow them through because the U.S. tax is going to be higher, or if it's something like that. And then yeah, you're going to have to get familiar with a tax treaty and be comfortable. You know, I'm sure we use RIA for, you know, Checkpoint for everything, and every single up-to-date tax treaty is in there. Once you feel comfortable with one, you'll probably be comfortable with all of them. You just got to know the differences. But the first time you really dive into one, your head's probably going to hurt later that night. But yeah, so if you've got a client who's looking to set up there, I'd say it's pretty probably facts and circumstances driven as far as to what they're doing and what the treaty looks like and what withholding there may be and yeah, exactly.
Okay.
Yep.
We have a question from somebody watching the stream.
Sure.
If you have to amend an FBAR now for last year, does it need to be e-filed, and are there any penalties for an amendment?
Yes. Well, I mean, it depends what. I mean, there can always be penalties. Is the short answer to the one question. But yes, it will need to be e-filed, or else they can paper file. But as I said earlier, there's going to be that they'll accept it, but there's going to be a $500 penalty for the paper filing. So they will still accept them. They're just going to send you a bill for $500 for non-compliance. And if for some reason you think it's worth that to not e-file, then you may want to do that. But yeah, that was the point I was trying to make. Is I made the mistake of saying June 30th earlier, but it was really effective July 1st. Every FBAR you file, no matter what year it's for or whether it's amended or not, needs to be done through the FinCEN website. So that'll go for amended returns as well.
And he indicated the amendment was just correcting some amounts. So
yeah, I think you're still going to wind up with that $500 fine unless you do it online. So whatever you're amending for, it's going to have to be done through the FinCEN website.
But if it's done online, there's no penalty?
No, if it's done online, that's they just want you to comply with the new the new regulations that say everybody's got to do it online. So there won't be any penalty for, there won't be, excuse me, I should correct that, there won't be any penalty related to the filing, but whether or not there's a penalty because the amount you put on there was so egregiously wrong and it relates to some kind of income that you're not putting on your return, then there could very well be penalties. But like I said, the IRS refuses to define a willful or non-willful late filing, non-filing, and that's so that they can reserve the right to issue a penalty whenever they feel like it, I think. So I can't tell them that there won't be any filing penalties. Yes?
What's the FinCEN website, what is it exactly?
The website itself,
Yes.
I don't have that. I mean,
what
is it FinCEN.gov? It is FinCEN.gov? Yeah.
Yeah, don't forget, it's one that's a branch of criminal investigation.
Right.
If you want to get technical.
Right, Financial Criminal Enforcement Network?
What it is?
Yeah.
Yeah. All right, well, thank you.
Good job. Good job, Sean.
The garbage for you.
Yep. A lot of stuff like we're going to worry about in our office with this, right? With the FBAR filings and asking our clients and getting the organizer checked off and saving it. I mean, I get this from Howard all the time. Get it signed off on and put it in your DMS system or your paperless system that they said they didn't have foreign bank accounts. So, big area, a lot of penalties. So, thanks again, Sean.